Morning, everyone, and well done for getting here at this ungodly hour on a Saturday morning. I think it's fair to say that the financial services industry does not have a great track record of speaking the truth to its clients. I could trace that at least as far back as the formation of the Federal Reserve in 1913, which turned out not to be a federal organization and not to have any reserves. More recently, we've had the suggestion that a great investment idea would be to put all these subprime mortgages together into mortgage-backed securities. That didn't go terribly well. The banks have been in trouble for manipulating LIBOR interest rates, for mis-selling insurance and all kinds of other things, and more recently still for debanking people for no apparent reason. And like Nigel Farage, I'm a victim of that myself. Now, what I want to talk about today is something that's really been in the news for about the last 10 or 15 years, and that's ESG. Now, let me say right up front, I don't have a problem with thinking about the environment. It's the only one we've got. Of course, we all want to be good members of society, and of course, we want our companies to be well governed. There's nothing wrong with the three words. There's nothing wrong with the three concepts. But when they're pulled together into this thing called ESG, which then gets politicized and weaponized into a quasi-religion, and then gets used to make all kinds of multi-trillion-dollar asset allocation decisions, it's not such a good thing, especially for people like us, private investors. So what I want to do in the next few minutes is go through some of the challenges and issues with ESG, and then focus on some of the companies that are genuinely innovating that we are investing in and that you might want to consider investing in as well. So what is ESG? Well, it's really using a whole bunch of non-financial criteria to make investment decisions. And perhaps the most challenging of all is this concept where we move from shareholder capitalism, where companies simply exist to make profits for their owners, to something called stakeholder capitalism. And if you take it to its logical conclusion, everybody on the planet becomes a stakeholder in every company on the planet. And that clearly doesn't really help at all, doesn't add anything, doesn't really make it a good system. So what you have is this idea that traditional capitalism is too narrow, we need to take this much broader view, and again, superficially it's lovely, but in reality I think it leads to some massive distortions of investment decisions. There's clearly an agenda going on. And whenever I can sense an agenda, I always ask the question, who benefits? In whose interest is this agenda? And clearly the fund managers, because they charge higher fees for ESG funds, so they're making money out of it. The companies there's all sorts of ESG scoring systems. So if you come out nicely on one of those, you can virtue signal. Now, interestingly enough, some of the companies that get the highest ESG scores are weapons manufacturers. And you wouldn't have thought that they were doing a good thing for the planet, but there you go. And of course, as we know, politicians will not let any bandwagon go by without jumping on it. So they've really gone to town with ESG, and they are lobbying, and the lobbyists who influence them, and all the virtue signaling that's going on around this. So there's a lot of people benefiting from it. I would argue the people that are not benefiting from it are you and I, private investors. But as a marketing campaign, I have to tip my hat to them. It has been phenomenally successful. Well over $17 trillion already invested. And Bloomberg are saying it's going to reach 50 trillion within the next 5 years. It's mainly coming from the big institutions. It's the BlackRocks, the Vanguards, the State Streets. They're the ones that are making these asset allocation decisions, rather than the likes of you and I, the individual investor. But there's a lot of people who feel ESG is not really serving a purpose. For one thing, there's no industry standard. There are all sorts of different metrics. How do you come up with an objective way of testing these subjective things? Very challenging. So there's no standardized metrics. It's very easy to greenwash. I mean, the FCA has issued a recent warning saying, watch out for companies that are stating that they're very green when the reality is quite different. And there's no doubt there's been a big financial impact. It's a huge distraction for boards of directors. They no longer just have to focus on making a profit. They have to try and be good corporate citizens in line with ESG. And I do think it's been politically motivated. Elon Musk says it's a scam that's been weaponized by phony social justice warriors. And I think there's a degree of truth in that. It's being used for an agenda. And when you start applying agendas to things like investing, it doesn't usually end well. What we've got now is this enormous amount of investment firepower concentrated in very few hands. These people are not elected. We didn't vote for the things they're doing. And one of the things that I think is really the most egregious about this is that they are defining certain industries as kind of dirty and unworthy of investment. And there's no better example of this than fossil fuels. There's so much naivety and, frankly, stupidity around at the moment. Our wealth today that we take for granted is based on two things: free market capitalism and cheap, abundant energy. Without those things, we go back to the Dark Ages. And at the moment, these just stop oil protesters, it's nice on one hand, we were all young once, but hey, we're going to be using fossil fuels for a long time. Even if we want to achieve the net zero transition, we'll actually need more fossil fuels than we currently have. Now, I'll tell you how crazy it's getting. I don't know if you follow Canadian politics. There's a senior Canadian politician, in all seriousness, has put a bill before their parliament saying, if you talk up fossil fuels and say, like I'm saying now, that they're a great thing and that our wealth is based on them, if I gave this talk in Canada, if he gets his way, I could go to jail for 2 years or be fined $500,000 simply for talking up fossil fuels. That's the level at which they're trying to, A, control free speech, and B, set the narrative and the agenda. It is crazy. If you're running a big pension fund, you're in a difficult position because you want to get the best return for your pensioners, but equally you want to be seen as a good corporate citizen doing all this ESG stuff. So they're very conflicted at the moment. If you're a board of directors, you're increasingly being asked to take a position on things like Black Lives Matter or LBGT, and whatever you do, you're damned if you do, you're damned if you don't, because you're going to alienate a whole bunch of people, your potential customers, if you take one position. And if you take the other position, you'll alienate the other half. So these kind of issues are putting companies in a position they really should not be put in. So how are they actually doing? Well, there was an independent study by the London School of Economics and Columbia University over almost 10-year period. And they found that the companies in these ESG funds were breaking more labor and environmental laws than the average companies outside of the funds. So that's a great big fail. And then you say, okay, what about the actual financial performance? No, they didn't do that either. They underperformed the same fund, similar funds, non-ESG funds, with the same managers at the same time. They underperformed. So you're paying more, you're getting less, and the companies within the funds aren't even performing in line with the way they're being described. Now, at the core of all this is the climate crisis. And I got this data from some Australian scientists, and what it shows is that at the moment, the Earth's temperature and CO2 levels are marginally below where they were 100,000 years ago. Does that sound like a climate crisis to you? You see, the problem is that 25 years ago, when I bought my first business, it was a chain of medical clinics. And one of the things I quickly discovered was that there's no such thing as medical fact. There's only medical opinion. You give the same set of data to 3 doctors, you'll get 3 different answers. It's the same with climate science. There's no such thing as climate fact. There's only climate opinion. This guy's a recent Nobel Prize winner, John Clauser. He's one of 1,600 eminent scientists signing a declaration saying there is no climate crisis. And he accuses the UN of being one of the biggest spreaders of misinformation about the climate, particularly their Secretary General with his new phrase about global boiling. Please. So, you have to make your own decision based on all of the data. But what happens if there's an inconvenient truth, as Mr. Gore once talked about? What if the real data doesn't fit your narrative? Well, we're back to Canada again. And Justin Trudeau's team decided they'd better remove 100 years of climate data because it didn't fit the narrative. So, for example, Vancouver had higher temperatures in 1910 than 2017. Toronto had a warmer summer in 1852 than 2017. And in Moncton, it was cooler in 2017 than in 1906. So clearly, this data is being manipulated to fit a political narrative. And we as investors have to see through that if we're going to make sensible investment decisions. One of the best whistleblowers has been this guy, Tariq Fancy. He was actually the head of ESG investing at BlackRock, which is one of the biggest asset allocators. And he said it's all just a box-ticking exercise. They can't actually come out and say that they're going to choose these other companies instead of the best performing ones, because that would be a breach of their fiduciary duty to get the best possible outcome for their investors. So they go through this kind of box-ticking dance to make it look like they're being effective with ESG, but really it's kind of glorified virtue signaling. And he was right at the heart of all that until he left BlackRock. Even his old boss is backtracking now. In his 2020 letter to shareholders, ESG was mentioned 26 times. 2 years later, there was a single mention, and now it's no more. He says it's become a toxic term. Well, he actually turned it into a toxic term, to be fair. So he stopped using that term. In America, quite a few states, I think about 13 or 14, are now saying we will not allow our state pension funds to invest based on these criteria, because this is institutions using other people's money to pursue social and environmental goals. So they've said to their state pension funds, you cannot invest on this basis. S&P have withdrawn their ESG ratings. They were heavily criticized for not being consistent. They've been removed. You've probably noticed the EU's had to back down on a lot of net zero initiatives under pressure from farmers who are protesting right across Europe. And we seem to have fallen out of love with electric vehicles. There's unsold stock in showrooms all around Europe. Hertz Rent-A-Car bought 100,000 Teslas in 2021. They've just sent back a third of them and taken a $245 million loss on those cars because people are just not asking to rent electric vehicles. So I think, for me, the fundamental issue is that this whole process of ESG was not something we voted for. It was brought in by big institutions, whether we liked it or not. And one of the things that we emphasize, Tim said we're a private members club for sophisticated and high net worth investors at Beaufort Society. We always say you have to take personal control of your financial future. Nobody else woke up this morning with your well-being at the top of their agenda, except that person looking back at you in the bathroom mirror. So you've got to ignore other people's agendas and set your own agenda, be the conductor of your own orchestra, regardless of how many advisors you have. Otherwise, as I found to my cost many years ago, if you delegate to these people, they may do things that you don't like. I think this journalist in City AM really put the solution as succinctly as I could. He just said businesses have got to go back to their core purpose, designing great products, creating well-paying jobs, making money for their shareholders, and critically, the role of the institutions is to find out who's doing that best and put the money there. That's what institutional investing should be all about, and not being perverted by this political ESG agenda. So what is it that drives profits for business? Well, it's innovation. It's doing things different, doing things better, faster, cheaper, being more productive. Productivity is a critical issue in this country at the moment. We can't even get people back to the office from working at home. One of the most important things that I've seen is when you can combine technologies across different industries to create something new. And I'll give you an example of that in a moment. You can create massive new wealth. Some of the companies we've invested in have gone from 0 to 160 million value in 2 or 3 years. And sometimes I think we need more champions for capitalism, because there's no way socialism does that. Socialism destroys wealth, capitalism creates and builds wealth. But at the moment, it almost feels like that's an out-of-fashion, old-fashioned thing to say. And this is another critical point. A lot of the biggest and best companies began by relying on people like us. Private investors willing to put their savings into these companies to actually get them off the ground to the point where the institutions come in later. So we tend to do growth equity, so we don't do startups, but companies that have proven their business model and need to get to that next stage, we kind of plug that gap until the institutions get involved. That's where we sit. And without people like us, these companies would often just wither on the vine. Let me give you a couple of examples. Last year, we raised, I think, just under 3 million for a company called Glint. We've always said to our members, you've got to have some gold in your portfolio. Boy, do you need it at times of high inflation. If you've got my level of confidence in fiat currencies, you definitely need some gold. But we had to accept it wasn't very practical. You couldn't go into Starbucks and pay for a cup of coffee with a gold Britannia and say, have you got change of 1,637 quid? They kind of give you a funny look. But what Glint did with a combination of a phone app and a MasterCard is that you buy gold in the Brinks Vault in Zurich, allocated in your name, and then when you go into Starbucks, you get your Glint MasterCard out, you tap the terminal, in 200 nanoseconds, it sells £2.50 worth of gold in Zurich, and the merchant is none the wiser. It's already been converted to sterling. They do it in dollars, euros, and yen, and they're adding some more currencies to it. So they've now got 200,000 clients, 100 million gold on the platform, and they're doing something genuinely different. But the most exciting thing is, I don't know how close you are to American politics at the moment. I think there's going to be a civil war over there before November, I think. 12 or 13 US states are now demanding their constitutional right to gold-backed dollars. And they're talking about using Glint as the platform for making that happen. They're in advanced talks in Utah, which has already passed new laws to make this legal tender, and also I think in Texas and Kansas. So that could transform the company and certainly for a lot of Americans make the world a better place. Just one more example I'll give you. This is we set up our company in Dubai last year, and this is the first project that we've won over there, a company called Innovative Global Group. They're an Australian developer focusing now on Saudi Arabia. There is so much going on in Saudi at the moment. It may not be somewhere you've thought about investing, but there's such a lot going on, you really can't afford to ignore it. And what they do is they have amazing technology that they build for each project. So they built the metro system in Melbourne. They're bidding now for Sydney. And it's these giant construction things that can pour hundreds of thousands of square meters of cement. Then there's a lot of very clever technology and intellectual property in the gray box here that controls it all. And it's very fast compared to traditional methods, and it uses less labor. So that's an environmentally friendly way of doing it. And then they've got this other product. In tower blocks, the things that come up the middle where you have the lift shafts and the stairwells and so on, they've got a way of producing those much faster and, again, much cheaper than traditional methods. So when you look at this project, 2 hotels side by side, both 40 stories. They use their technology on this one. This was done by a traditional developer, and theirs was finished 15 months sooner. And if you're bidding for projects in Saudi where they've got this big Vision 2030 thing, it's a bit like, remember when Kennedy said, we probably don't remember, but take my word for it, President Kennedy said in 1961, we're going to get a man on the moon and bring him safely back to Earth by the end of this decade. If that had taken until 1979, it wouldn't have worked. Well, Vision 2030 has got to be in place in 6 years' time, otherwise there'll be some extremely red faces. So this kind of technology goes down very well. But from an environmental point of view, the most exciting development is this stuff here called Graphine Concrete, because this does not use cement and it does not use water. And cement is responsible for about 7% of all global CO2 emissions. So you know how in the Middle East they're desperately trying to look more green because obviously they come from a fossil fuel background. Using materials like this, which can even have recycled materials going into it, is going to be hugely significant. So there's a joint venture being signed between IGG and the producers of this graphene cement. They're doing the R&D on it this year, and they're deploying it next year. And once you get all 3 of those technologies working together, it will be completely unique, and it will speed up these projects. So they've got a huge pipeline worth multi-billions. Okay, so we as Beaufort focus on wealth creation assets within your portfolio. Typically, we suggest you have 2/3 in wealth protection assets like property, gold, the safer things, cash and public listed shares, and then 1/3 of your portfolio on the wealth creation side. We provide private equity shares, and we provide private debt, which is things like convertible loan notes that pay an income while you can decide whether you want to convert to equity. We also, unlike many, we think Bitcoin has a place in your portfolio. It's an asymmetric bet, basically, and obviously at the moment it's absolutely on a tear. And we also think commodity companies are as cheap as they've ever been. We think there's a 10-year bull market in commodities just starting now. We don't actually have a dog in that fight at the moment, but we're certainly looking for some commodity companies to invest in. But we have some very interesting private equity and private debt opportunities. So we run as a club rather than having a transactional relationship. We had our own live event in London the other night. We do webinars, we do physical newsletters that we post to our members. And because we get paid by the companies that we're raising funds for, we don't need to charge membership or investment fees. So it is actually free to join. And you can join at beaufortprivateequity.com on our website, or indeed on our stand downstairs, which is M34. Or you can even scan that QR code. We've got all the technology here. So in summary, my belief is that private investors like us have been misled by ESG. I think it's been very much a marketing gimmick. There are real companies out there that are doing real innovation. That's where we should be investing. That's where we'll get the real rewards. So if they focus on profits rather than politics, we'll all be better off. So that's all I've got to say. Thank you very much for listening.